Hi, I want to cover a few things today. First is a quote from Robert Ross. He runs a research firm. He says, in the short term, bears, or people that think the market's going to go down, seem really smart. They come out with some stuff that scare you, and they seem really brilliant that they think the market's going to go down, and it has gone down in the short term. But in the long term, people who are more optimistic tend to do better. So people who invest in the stock market, the real estate market, and have risk in their portfolio tend to do better in the long run. But in the short term, if you listen to these bears, you get really scared, and it can really affect your view on things. So that would be my opinion, is stay away from negative people, because that is going to have one of the greatest impacts on your investing, is listening to negative people and have that sentiment come in to where you are. US-China has been in the news. Nancy Pelosi was going into Taiwan. China views Taiwan as one of their islands, and so Taiwan actually makes a lot of microprocessors, and so there's a big kind of US doesn't want it to see it go to China, and so the markets didn't really like that, and they're trying to figure out if China's a paper tiger or they're actually serious, and there's going to be ramifications from that. So far nothing, but we will see. Markets often go down really quickly in the short term. And so this year we've seen that with rising inflation. We saw markets slide down into June, and it rebounded a little bit now. And that coupled with people's sentiment for loss. So you feel a loss twice as much as you feel a gain. So thing goes down $100, it feels to you like it went down $200. And if it goes up $100, like, hey, that's great. Statistically, though, there's more up days in the market. They're just slower, steady gains. But so when a short drop happens, you tend to feel it more. So just keep that in mind when you're reviewing your statements and looking at things, how your emotions are. And it's probably because you're feeling that loss or the market going down twice as much. I will say that it's a paper loss as well. Like investments, you don't realize the loss till you sell it. And so just keep that in mind as well. Like if you've got a good diversified portfolio, and you want to stick to your plan, that's going to help you out long term. In the short term as well, the stock market is a voting machine, and so it runs on sentiment. And so, what's happening today, news, it's really reacting. In the long term, it's more of a weighing machine, and that's earnings. So they're weighing what the earnings are in the long term. So in the short term, it can be very volatile. In the long term, it's based on how a company is doing. Let's put it another way. If you're at the beach, and all shells probably at the beach should be valued the same, right? But if a few people started collecting purple shells, it would make purple shells a lot more valuable at that point in time. And it might drive up the price of those purple shells because they've collected all of them. Consequently, if they decided to sell all those purple shells or get rid of all those purple shells all at once, it would drive down the price of purple shells and it'd be worth less than what the rest of the shells were. So just keep that in mind that in the short term, you can see fluctuations. In the long term, it tends to even out. I hope that helps. I hope you're having a great summer. I want to let you know I'm here as a resource. So if you or somebody friends, family, colleagues, I'm happy to be a resource for them. Have a great day.